Hey guys, my name is Max, and today we're gonna... this. Hey guys, my name is Max, I'm working for VeraOne, and today we're gonna talk about stablecoins. If you're new to cryptocurrency investing, you may or may not be familiar with them because chances are you've either started buying cryptocurrency on Coinbase or Kraken, where the stablecoins are not really put forward. So you've probably bought them with either euros or USD, which would make a lot of sense. But in this video, we'll explain why it is not the greatest idea to keep buying cryptocurrencies with fiat currency, so either euros or USD, what stablecoins are, and why they're a great alternative on the blockchain. Stablecoins are digital currencies that were built on the blockchain to mimic the price of a fiat currency. In simple words, that means that there are digital versions of the euro, the US dollar, the GBP, and even the Brazilian peso, to be honest. And stablecoins are really useful because it allows investors to get out of the market and take profits without actually leaving the blockchain. Let me explain. When you've invested into a cryptocurrency, you are a holder, or a hodler, as we say, of said cryptocurrency, which means that you have some or a fraction of a cryptocurrency, for example, Bitcoin or Ethereum, which are the two most popular cryptocurrencies today. So let's say that you've bought cryptocurrency recently and that you've made a profit because, well, on average, at least regarding Bitcoin, it has been appreciating for the past 11 years. So let's say you want to sell that Bitcoin, but what do you sell it against? Do you want to sell it against some fiat currency, some USD, Euro, GBP, whatever? Or do you want to sell it against a stablecoin? Well, some have perks and some have disadvantages. Let's say you want to sell it against some fiat currency. Well, that's good because then you can send it to your bank account and spend it however you'd like. But the problem is that you're making a profit, and the very nature of investment is that as soon as you make a profit, it becomes taxable, or at least if you go back to fiat currency, and it's the case in most countries today. So that would be your first option. Your second option is to sell it against a stablecoin, so a fiat-collateralized stablecoin. We'll come back on that. If you sell it against a stablecoin, well, you're basically selling your Bitcoin against another cryptocurrency. Because yes, a stablecoin is going to have the value of $1 or a euro, but technically speaking, it's a crypto. So you're doing what we call a crypto-to-crypto exchange. And just a bit of a disclaimer here, this is not legal or financial advice. As of March 2021, in most countries, crypto-to-crypto trades are not taxed. But it can change depending on where you live, so when you watch this video, please refer to your country's legislation to know more. The second advantage of selling your Bitcoin against a stablecoin is that, well, your stablecoin is going to stay on the blockchain. So you're not leaving the blockchain and you're not going to have to wait for 2 days for a bank transfer or wire transfer. It's going to stay on the blockchain itself, and you can send it easily on another exchange platform or exchange it for another cryptocurrency afterwards. So just to recap, a stablecoin is basically a cryptocurrency that's going to mimic the price of a fiat currency, but which is technically a cryptocurrency because it was built on the blockchain. So now we're going to talk about the different types of stablecoins that exist. Well, most of them have been built on Ethereum. Ethereum is a blockchain that allows people to build basically whatever they like, but on a blockchain. So most of the stablecoins that you know today have been built on the Ethereum blockchain, but you can also find some on the Bitcoin blockchain, or actually on a layer 2 of the Bitcoin blockchain, but that's for another video. You can also find some on the Algorand blockchain, on the Stellar blockchain, and even on Solana. But again, that's some subject that we'll come to in another video. For now, we'll focus on the stablecoins which were issued on the Ethereum blockchain, as they are most common and also the most exchanged in the world. The first type of stablecoin that was built on the Ethereum blockchain is called a Fiat-collateralized stablecoin, which means that, in theory, you have a digital equivalent of the euro on the blockchain, of the euro or the dollar on the blockchain, and in the vaults of the company that built this cryptocurrency, you're going to have an equivalent in fiat and physical fiat currency. Physical or digital on at least a bank account, so that if people want to withdraw the money, they can. There are many fiat-collateralized stablecoins on the market, the most popular being Tether. You can see the stablecoin supply dominance in this graph, where you can also see other fiat-collateralized stablecoins. And as you can see, USDT, the pink part, which is Tether, has a huge part of the total supply on the market of stablecoins. Then you're going to have USDC, which is a USD collateralized stablecoin, which was created by Coinbase and Circle. And then you're going to have BUSD, which was built by Binance, the biggest cryptocurrency platform in the world, which was also built on the Ethereum blockchain and also on the Binance Smart Chain. Now, you're wondering why. Well, he talked about USDT, he talked about USDC, he talked about BUSD. But at the third place, you've seen the DAI. And the DAI is pretty particular because it's not fiat collateralized. And that's the second type of stablecoin that exists. The DAI is a crypto-collateralized stablecoin, which was made by MakerDAO. In short, it is not backed by fiat currency, but by an algorithmically adjusted basket of cryptocurrency that is going to keep a $1 value thanks to balancing mechanisms. But again, it's a bit complex for another video, so if you want us to explain what it is in detail, let us know. And finally, we have asset-backed stablecoins. So basically, they're a stablecoin that will follow the price of the asset or commodity they're backed against. Of course, the definition of stablecoin is kind of put to an end here because it's not really stable. Because if it follows the price of an asset, well, you know, it's not really stable as it is. But well, it's a lot more stable than Bitcoin or Ethereum, so you know, there's kind of a sense here. VeraOne and the VRO token is a great example of an asset-backed stablecoin. The VRO token is basically a digital representation of an audited physical gram of gold that we keep in our secure vaults. Which means that you can exchange your Bitcoin or Ethereum against some VRO tokens, so basically against physical gold. And that brings many advantages. The first one is that you're buying an audited, asset-backed, redeemable stablecoin that has actual value. We'll explain in another video why holding USD-backed stablecoins is not really the best idea for your portfolio over the years. The second advantage is that gold is an ever-appreciating asset that has been used for centuries and a bit more, actually, and which has really never quite lost in value. Of course, you're going to have some, reevaluations of the gold price, you're going to have some fluctuations, but it never lost value in terms of purchasing power. And quite the contrary, actually. So having a stablecoin, which is backed by physical gold in your portfolio, is a great idea because, everybody loves the cryptocurrency volatility. It is why we make gains. It is why we make profit. It is why we, some people are buying Lambos out of it. Why not? But it's also good not to have all your eggs in the same basket because we've known days on the cryptocurrency market where you're going to have a minus 60% that's going to happen in less than a day. Do you really want that to happen? If you invest $1,000 into the market, the next day you're left with 400. And that happened. It happened on the 13th of March 2020, and you don't want that to happen again. Or if you have some profit that you wish to realize and get into an audited physical gold-backed stablecoin, that's a great alternative because you're going to have something that appreciates over time. So in conclusion, stablecoins are a great alternative to fiat because, you can stay on the blockchain, you don't have to be taxed on every profit you make, but you have to choose which type of stablecoin you want to use. Of course, having USD or fiat-backed stablecoins are going to be great for trading because it makes it easy to invest in other cryptocurrency. But if you're holding some stablecoins on the market because let's say you're waiting for a market drop or you're looking for a better buying opportunity, it's always good to diversify. Diversification is one of the best investing advices out there, and it's for a reason. And even more so with an asset that appreciates over time. Now, of course, I'm not going to say, because we say that stocks only go up, right? Which is, not true, but it's a meme, so it's kind of funny. So I'm not going to say that gold is always going to go up, but over time, over the past decade, over the past centuries, it has always been going up. Maybe it will, I don't know, but it's a great opportunity for your portfolio to diversify and to have a stablecoin that is backed by something. Some of the stablecoins out there are probably backed by, actually backed by fiat. Some of them may not, but that's something we'll come back to in another video. Thank you for watching this video. If you liked it, let us know. And if you want to know more about cryptocurrency, gold, and investing in general, you can subscribe to us on YouTube. It's been Max. Thank you. Talk soon.